Welcome back to the channel, everyone. Thank you for tuning in today. Yes, we are into the weekend, but I wanted to make another video for you individuals out there that really show interest and love the channel and love the content that I bring. Even though I talk about some of the same things over and over again, that's because I want people to truly understand this stuff, okay? Now, if you're here and, maybe you already understand what I'm getting ready to go into, then you don't have to watch the video. This is just strictly for people who have a hard time understanding some mistakes that they're actually making in their own personal trading. Trust me, because when I first started off, I was making mistakes too. I didn't really start becoming successful, profitable until my second year into trading, but it all centered around my eyes opened up when I started to truly understand supply and demand and really how to read the market, because market structure, I'll say this in every video, is king. It is the best way. It is the only way in which you're going to become a successful trader. Understand that, all right? So I'm going to show you some things that, the first and foremost, what I want to say is this right here. Stop being so engaged in having to feel like you need to take every little setup. I was doing the same thing. If you're someone new watching this video today or a beginner, what I'm going to show you is probably going to help curb some of that problem making, those mistakes that you're actually taking in your trades, so where you're not taking every little trade setup. Because one thing we do not want to do is fight against the opposing force. I shouldn't say opposing force, but fight against the force of what's going on our higher base or higher time frame charts. Okay, so many people are trying to go long into a supply area or a resistance area when they should be looking for opportunities to go short. All right, and vice versa. You could be looking to do what? Go short into an area of support on area at a demand area. Okay, don't do that. Okay, because the higher time frame is it has the most power, the most impactful areas in which we should be trading with the market, with the trend versus going against it. So let's take a look here at a few examples. I don't want to kind of beat this video up in the sense of keep making it too long-winded. I want to make this simple as possible. But I know trading can be very addictive, because it's like chasing something. We're in this business to make money, and the moment we fail or we lose money, we get right back into it. It's like going to the casino, I don't do that, but a lot of people think that trading is gambling. It's not, okay? It's high probability stakes that are at risk here, and it's about us making the right choices, all right? So the thing about it the most is you cannot be an addict behind trading, all right? You have to be smart, not an addict, because addicts end up failing and end up blowing their accounts left and right, whether you're trading with your own money, own capital, or through some means of capital trying to get funded through a prop firm. So the first example I want to show you, and this is coming out of Friday's trading session. If you see what the market has been doing here, we've been making movements or swings to the upside, breaking structure. And by now, if you've been watching the videos, you know what breaking structure means. You know the overall trend. You know the trend in which we should be trading, and that is to the upside. Okay, all right. But what you see up here, okay, is an area of resistance off to the left-hand side of the chart. Let me see if I can kind of show it to you right here. Okay, I believe that was an area of supply from January the 24th. Yeah, January 24th. But either way, it was also an area of resistance which the market tapped into. So let's do this, okay? So I'll blow it up a little bit so you can see what I'm talking about. All right, so this was an area to the left-hand side of the chart, which I just showed that the market rejected and we started pushing lower, correct? So then we broke through an area of structure to the downside right here. We got to push, broke lower right here. Now the mistake that most traders take is this right here. When they see this rejection right here and the market breaks lower, so many traders are stuck on what's going on their lower time frame or lower base charts. If you look at a lower time frame chart, a lower base chart, I'm going to show you right here. Pay attention to this area right here because I'm getting ready to show you the same area on my 12 range entry chart. The market starts to move higher, you'll see on the lower base chart. And when it's doing that, traders are engaged and they get forgetful or not being mindful of what's going on the higher base chart. We want to trade in the direction of the higher base chart. So let's now move down to the lower base chart where I show you where the market starts to push back to the upside. And people get captured in wanting to go long versus when, opportunities where they should be looking to go short because the market at this point here broke some structure. Now, the trend of it breaking structure, or it looks like it may be trying to break to the downside and maybe having a continuation, moving to the downside, that could shift at any given time. We don't control the markets as retail traders. We only simply trade what we see and what's going on activity-wise surrounding price action. Now, this area right here now is an area of supply. Okay, so why would you want to be looking for opportunities to go long into an area of supply or into an area of resistance? So let's move down to the lower time frame right now. But before we do so, just pay close attention to this red line because you're going to see it appear again on my lower base or lower time frame chart. All right, so now you see the 12 range. This is my entry chart. This is that same area where the market started to turn around off of the higher base chart. Now we had already broken structure to the downside on the higher base chart just as well. But look what takes place here on the lower time frame, or lower base chart. We start to break structure back to the upside, pushing back up. This is where people or traders they become narrow-minded and just trying to trade off of the 12 range chart and strictly not understanding or paying attention to what's going on the higher time frame. We already broke structure to the downside. Why are you going against the force of the market where it's already broke structure on a higher base chart and wanting to look for long positions? Now, can you take a long position back up to that area of supply? You can, but you have to be smart about it and understand the structure of the market and price action as it, once it broke structure on the higher base chart, and looking above you to see areas where the market can stop it. The market can reject at any fair value gap or imbalance and then start to want to push lower. Okay, so for me, I'm looking for the opportunity to continue to go short versus going long into an area of support or into an area of, not support, into an area of supply or into an area of resistance. Because look what happens here. The market starts to break structure back to the upside. Once it gets back up there to that top, an area of supply or resistance, look, people start to do this. They see these breaker structures back to the upside, okay? Made a high here, higher low. The market's still breaking structure to the upside. They're looking for areas in which they can take the market going higher using the off the lower time frame chart. And again, forgetting the overall direction or forgetting what's right above them on a higher base chart. Looking back at the higher base chart, why would you want to go long into this area right here when this is an area of supply, aggressive selling, or resistance once the market gets back up here? They forgot to go back and look. They forgot to be mindful before they even started trading to go long off of the higher time frame chart to see where the market is bumping up against, okay? You do not want to take a trade when the market has been showing its hand, pushing aggressively to the downside here, and all you're doing is fighting a brick wall, fighting a brick wall. You try to go long, boom, slams down. Go long again, slams down, and you get stopped out every single time doing that. Do not try to push a brick wall down, okay? Especially when it's the institutions or the banks that are really, causing this aggressive movement right here. They're going to run you over like a train every single time, all right? So don't try to go long into the opposing force, okay? Don't do that, especially on the higher base chart. The higher base charts are king, just like market structure is king. Trade in the direction of what you see unfolding. I would have waited for an opportunity to go short here at a key area or high probability zone of supply right here versus going long into it. That is what makes most sense. Okay, so that's just one example. Keep that in mind. Now, so it rejected this area here. It didn't come down and break below here at 664. It continued pushing higher. Yes, we broke structure here, back to the upside. And look what happens. The market makes a new high. It pulls back. It breaks structure again. But back here, this is demand, right? Okay, so this is a demand area where you can look to do what? To go long. But let's take a look now at the lower base chart. Again, you're going to see where a lot of traders get caught up in this type of activity to where they're going to be looking to go short because the lower base or lower time frame chart is breaking structure to the downside. When things line up where you have the higher base chart or higher time frame chart pushing to the upside, for example, and the lower time frame or lower base chart pushing to the upside, we want to trade in the same direction, looking for pullbacks to key areas of demand to go long. When the higher time frame or higher base chart is moving lower, and the lower time frame or lower base chart is going lower as well, we want to look for pullbacks to go tap into areas of supply to go short. Take a look here. Market break structure, area of demand, aggressive buying area right here. Okay, why would you want to go short into this area here? You want to go long, right? Okay, you want to go long. The market does come back to the high here. It rejects it. Okay, then it comes back down and rejects it again. But it's aiming. At this point, you have to see what's taking place here. Once it rejects the demand zone and it pushes back up and it doesn't break through it, what is that? That's rejection at an area of resistance. In this case here, making a lower high. So then you have to start thinking to yourself, okay, the market's rejecting this and making a lower high. Is just making another low, okay, wicking out right here, comes back up, makes a rejection again with equal highs, or in this sense here, think of it as a lower high again, and then it's going to push lower. This is a triple top here. I don't trade patterns like that. I'm just saying that you have to understand, is the market breaking higher? No. First attempt, no. Second attempt, no. You know at that point, you should know and start gearing up that the market is getting ready to go short. But let's talk about this. This demand zone right here. Look what happens now on the lower time frame chart. This is around 2:45 Eastern time on Friday. Okay, so this is on the 12 range, my entry chart. Again, we're back on the lower time frame. We just saw that that there was bullish activity on the higher base chart, right? Now you see that triple top area right there I just showed you? Okay, I'm paying close attention. All right, so the market breaks that area structure I showed you on the higher base chart. Okay, break structure. And you should be looking to go long, right? Because we are breaking structure continuously to the upside, and we want to trade in the trend to the upside on the lower time frame, a lower base chart. But look what happens here. People get forgetful again to look at what's taking place on the higher base chart. They're solely looking at what's going on the lower time frame chart. The market starts to break lower, breaking structure lower to the downside. Okay, taking out areas here and moving lower and breaking structure lower. So in this case, what they'll end up doing, beginner traders lots of times, they'll start to look for, and they're focusing on one chart to go short, because the lower base or lower time frame chart now is breaking structure to the downside, taking out areas and creating areas of supply. Like it pushed here, pull back, lower high, lower low, breaking structure here, pulling back. They're going to look probably possibly go short right here. Okay, it makes a new low, pull back, lower high, breaking structure again. I marked this box right here because I want to show you what happens right here. This is a supply area, aggressive selling off of a lower time frame or lower base chart. Again, okay? So they're going to look for opportunities for the market to pull back right here and go short. But what are you shorting into? Look at the higher time frame chart around this area here at 748 or 746 area. Okay? What are you shorting into? You're shorting into an area of what? Support, an area of demand. Do not go short, okay, into an area of demand or support. You are doing what? You are fighting an opposing force. You are fighting aggressive buying off of a higher time frame chart in which the institutions or banks were filling orders to push higher. They're going to come back and retest this area because, for one, there's an imbalance resting right here. There's a fair value. There's a gap right there. When they get back there, they're going to fill the rest of their orders, hopefully, to get filled, take it back up, fake traders out, and then push the market lower. You have to understand what's going on. Guys, you don't have to use technical indicators. You should be able to read this stuff with your own eyes. Once you start doing this stuff over and over and over and looking for things, you'll see the setups and understand the movements and what the banks are going to are trying to possibly take. Now, you're not going to be perfect at it. Nobody is. You know, we're going to take small losses, but the thing about that is, in preserving capital, is cutting those losses early before you start taking on too much drawdown. All right. I don't trade patterns. I don't trade, specific type setups. I trade setups, or I do trade setups surrounding supply and demand, but I don't look for pattern setups, okay, is what I'm trying to say. I trade supply and demand, and that's simply it. I trade what I see is taking place by what the institutions are really doing, okay? So some people will say they don't agree with that and will trade like that way. That's fine. Everybody has their own strategy and own way of trading. But one thing I do not do, I don't knock anyone for their own style of how they trade. Never have, never will. Whatever works for you, I say this time and time again, stick with it and trade that way. All right? I'm not here to bash any particular trader style, the way they trade, if they're a swing trader, position trader, a day trader, what market they trade, what setups or patterns they trade, whatever works for you, I'm telling you to stick with it. Okay? I'm just showing you the way that I trade in my experience and how I read the market and look at the market on a daily basis. Understanding market structure and understanding what's going on. But one thing for sure I'm not going to do is to trade into or against the opposing force. Okay? And that's the institutions and banks and the movements that they're making in the market. So I just want to share that with you guys today, because I see the same mistake taking place by beginner and new traders all the time. And even those traders that have been trading for a while, I know we all get caught up sometimes, and we're looking and we take trades just off of the lower time frame chart. Oh, the market's breaking structure to the downside, but they forgot to understand what's going on, with the market trending overall. What is the trend? What direction is the higher base charts or higher time frame charts really doing? What are they doing? Then trade with that, not against it. Okay. But that's all I have for you guys today. I just want to share that with you. Please take notes. Please, remember what I just said. And backtest it, trade it, okay? I mean, of course, you really don't have to backtest what I just said or what I just showed you, because the fact is, it is what it is. You can see it on your charts. All you have to do, whatever's going on in your lower time frame chart, just move up to a higher time frame chart to see, okay, the higher time frame or higher base chart is moving in the opposite direction of the lower time frame chart, then don't fight against the trend of the higher time frame. All right. But outside of that, I wish everyone a fabulous rest of their weekend. Also, if you're interested in joining the Discord, it's down in the description portion. Scroll down. You see the link there where it says Discord. Click on it. It's free of charge. Okay. There's nothing you don't have to pay a fee to get into or join the trading floor. It's a free community for individuals to come over, share their trades, discuss future markets, and things of that nature. It's a positive community. So come over and join us if you're looking to join a positive community. And engage, on the daily. Post your entries and post your trades. Ask traders, if you're someone that's new to supply and demand, ask questions if you have. There's no such thing as a dumb question or stupid question. Trust me when I say that, all right? All right, that's all I have for you guys today. If you could do me a favor, if you're not currently a sub, go ahead and click on the sub button, okay? You have nothing to lose here. Hopefully you can gain a lot of value through the videos and the information I'm sharing. As well as make sure to click on the bell next to it so you never miss one of the uploads. That means turn on all your post notifications. And last but not least, please drop a like on the video if you found value in the content. I appreciate everyone. I'll see you in the next video. Take care.